All right, guys, welcome back for another video. I figured I'd upload another momentum indicator strategy to go along with the stochastic video I uploaded earlier. Today we'll be going over the RSI, just using a standard issue RSI indicator on TradingView. And I want to share a few pretty useful tricks that I've used on this one. So I'm on the 7-day chart, and rather than the weekly. And one interesting thing before I dive into the RSI is how different the weekly chart is from the 7-day. Particularly, if you look at this area here, the candle body closures to the 7-day. But anyway, I actually find that the 7-day takes out a lot of the noise if I look at that chart as opposed to the weekly. Just because, the weekly chart in Bitcoin is a little messy because you have the CME close on Friday, and then you have the spot close on Sunday. It just gets a little bit messy, and sometimes looking at the 7-day clears out the noise. But anyway, what I want to look at on the 7-day chart is the RSI moving average, especially anytime Bitcoin gets very low. It gets down to the lower bottom of the read and then reclaims the moving average. So here reclaimed it briefly, sold in probably to a 618 retracement right there, and then finally reclaimed it again, and then you had a massive rally. You had the same thing here. Actually remember trading this, but Bitcoin reclaimed exponential moving average, the RSI EMA, and ran up, and probably would have continued if not for the COVID Black Swan event, right? The whole world shut down here. So that, again, that's a scenario where, it doesn't matter what TA you're looking at. And then it regained it again here, and rallied pretty aggressively up into these highs. Kind of fought with it for a little bit, but ended up regaining it here, and then you see an explosive move up. Lost it here. Again, this is an area where, maybe you were expecting a further retracement, but it ultimately regained it. And then you really get the parabolic leg right there. So you can see that, when it doesn't work out, you stand to lose a lot less than you stand to gain when, it does. And you do capture the momentum, and it does play out in your favor. Again, here's not a great example because you have a series of divergence, distribution pattern. If you get caught up in a distribution pattern, it's going to be pretty difficult. What you want to look for is after the distribution pattern or accumulation pattern, when the price reclaims the EMA. So like right here, you have this multi-month, very long consolidation. It reclaims the EMA and rallies up off it. And here you get a little bit of a fake out. It closes below. On the week, it does close below. You do sell off a little bit more, but again, maybe you took a little bit of profit, but all in all, you're probably going to get scratch this trade or get stopped out. But then you reclaim it, and it does give you the momentum here at this close here, up above, to trade up above these highs right there. And then finally, when it loses the exponential, that was a good sign to that momentum was lost, and you need to get out of the position trade right there. Even here, where it didn't really play out that much, you still got the closed above the exponential there, and you still got, it gave you 2 weeks of price. And actually, when it closed below, it closed below at break even, where it gave you the signal to enter. So even if you held on completely without taking any profit, it would have been a scratch. But if you took profit along the way, it would have ended up being a profitable trade, even though it collapsed on you. And then again, you can see when it did cross down, then it did also give you the momentum. That's a really useful thing for me that I use often. Again, and then just to go down to the daily pretty much catches. Typically, you'll see divergence come in at the highs pretty often. Also, the lows as well. You can see here when it, you want to focus on areas when it gets up to that critical read. So here, you almost approach the 80 level right there, and then you get one last push up to grab liquidity, and you can see on the RSI the divergence is pretty strong, and ultimately get you a breakdown right there, and then price kind of collapses. You got some divergence here as well. So price it comes down, sets a lower low on price, but you can see the RSI is making a steady march up. So it's just a sign that that when you see this in the RSI, it just means that the trend is weakening. So if you are trading a trend strategy or something like that, then this would be like a warning flag or a red flag that your strategy is kind of losing its edge, or at least it might be time to lower risk. It's especially useful in like on the daily and the divergence itself on distribution patterns, right? So here you have a Wyckoff distribution multi-month, and you get it starting in the critical zone. You get 3 drives. You can see prices making higher highs, taking liquidity, and as it's doing that, the RSI is consistently bleeding out of the extended zone, and then you get your 3 drives of divergence, and then ultimately then you get your break of structure. You take out these lows here and then rally into a 618, and that's your big sell-off. Typically whenever you see like 3 drives of divergence, that's a pretty good sign that something different is happening on the macro, that the market is kind of changing its structure and getting ready to go in the opposite direction. And sometimes, like in the COVID crash, you won't even get any divergence, especially at least on a time frame like this, like when there's a V-shaped recovery like this. So it really depends on the market conditions. I mean, right now you really don't see any divergence on at least the high time frames on Bitcoin. You do see a little bit on the 4 hour. So excuse me, you have this low here, and then a lower low, but a higher low on the RSI. Price comes up, but you don't really have a clearly defined break of structure, which is pretty critical. Typically, you see divergence is best played, in my opinion, in a consolidation environment. Like you don't want to play the RSI in a trending environment, because the RSI is essentially always going to be counter trend. So if you're playing divergence, you're always going to be if there's a strong trend, there's going to be a series of divergences forming as the trend is moving in the other direction. So if you play divergences in a very strong trending environment, you're going to be standing in front of the train, so to speak, and trading the market in the wrong direction. So preferably, especially when you're looking for multiple entries on the lower time frames, like you want to be looking at the a period in the market where there's a little bit more consolidation in the market. Here relative, you have a situation where the market had just come off a pretty severe rally up from 40K to 69K relatively, and then ultimately it did sell off after that. But there's this period here of indecision, right, of consolidation, and that's where you get your best RSI plays. Like right here, finally you get a very, very extended read way up into like the 90 level, and then you one last push higher. Well, actually, it's a 3 drive actually, because you got this push and then this push, but you can see the RSI is driving down, and then you get it in the opposite direction here. So you get this lower low here, but it's a higher low on the RSI, and then that's a sign that the price is going to make like a little bit of an inside gap. If you see that in a consolidation environment, then it's kind of a sign that maybe even the market's going to break lower, but it probably will reach upward for liquidity above the highs, at least in the range, and that would be considered an inside gap. So if you see the RSI produce that signal, then you wouldn't necessarily be looking at this as a break of structure. But and another important point to mention is that you have your higher low here, and this is very, very important for the RSI, right? You don't have RSI until you get confirmation of a break of the high. So in this scenario, you don't have RSI, or excuse me, you don't have divergence until this high is taken out, preferably on a closing basis. But you can trade this on a wick basis. It just depends on your preference. But ultimately, so you say you're trading this, you see the the lower low, but then RSI is making a higher low, and then you think, okay, I've identified RSI, well, or divergence, excuse me, and well, you don't really have it until this high is taken out. But once you see this high taken out, then you say, okay, we've got this micro break of structure supported by the divergence, and price is probably going to put in an inside gap, fill in this inefficiency up here. And essentially that's what it did before ultimately running down for these lows here, which is confluent with this area here. So price comes down, bounces off. So it comes down to this level right here, which is your point of release, your point of origin, whatever you want to call it, your shelf. And then it puts in the divergence, runs up, fills an inside gap, and then comes down and takes out these lows. Well, then on the high time frames, essentially here is what you've created is a apex formation. And that's actually when the market starts trending. So going back to what we were talking about earlier with the RSI and, being preferable in consolidation environments. So you see, you could have played it here within what was essentially a consolidation environment. But once you have this trending environment starting, then it starts to lose efficacy. Even though you do see it a little bit here, but I don't really prefer it in that type of environment. Honestly, I don't really trade the RSI that much at all, but it is a good way to explain, another concept that I do trade, which is the inside gaps and liquidity runs and breakers. And sometimes RSI is an easy way to spot them, right? If you're not familiar with spotting them, but again, it always has to be anchored within the context of price action and what price is doing. So that's just something to keep in mind. Anyway, I hope you guys like this content. If you guys do like this content, just make sure to like the video, subscribe to the channel, and I'll catch you guys in the next one.